we are going to be talking about the Russia-Ukraine crisis. So about the invasion, what is the effect of the invasion on the forex market? I know you all know about this news, Russia invading into Ukraine, causing a whole lot of brouhaha across the world, trust me, and this has also affected the financial trading market. So today, my job is not to explain to you what the crisis is all about, but my job is to explain to you how it has affected the currency markets or the stock market, the gold market, the oil market, or the financial market in which we are trading on. So that is my duty today. So now, before I kick off, you need to understand that whatever happens in the market is as a result of what? Demand and supply. Whatsoever happens in the market is as a result of demand and supply, like I always explain to you. Whenever there is an increase in a demand for a particular asset, you realize that the price of that asset goes high. The same way, whenever there is an increase in supply for a particular asset, you realize that the price of that asset goes down. So that is how it works. Everything you see, whenever you see market going up, meaning that demand is more than what? Supply. Whenever you see a currency pair moving down, meaning what? Supply is what? Greater than what? Demand. That is exactly what happens in the market. And then all this demand and supply is being influenced one way or the other by the fundamentals. And then for a country to enter into crisis or a war or any other thing would definitely have effect in the forex market. So as we all know, Russia is the second largest country that supplies oil to the world. They are next to Saudi Arabia. So just imagine they are into crisis. What will happen to the world? Definitely the financial world will be what? In crisis. So if, for instance, Russia is supplying, let's say, about 30% of oil to the country or to the world, now it is no more producing just because of what? Because it has centered all its energy to the war. All its resources has been now channeled to the war. So definitely there won't be any what? Supply at that angle. So about 30% of what? Supply in oil at that aspect has been what? Minimized. Definitely there will be what? Scarcity of oil across the globe, since the second producers of oil are no more what? Supplying. What will happen to oil? Definitely the price of oil will shoot up. So as a forex trader who wants to what? Take advantage of the crisis. So that is one beauty aspect of forex trading. Whether the news is negative or is positive, just know what to do. Once you know exactly what to do, that is where you can make money. Let me just crude oil chart for you to see exactly what happened. I know most of you traded it. We shared it, I think, on the page or so. Yeah, so the whole invasion started on the 24th February. So you see, this was the 24th February. You see, immediately after the invasion, market started trending down. Definitely, market is trying to what? To get an area of what? Demand for it to what? To shoot. And definitely, you see, when market gets to that area of demand, you see how markets shoot from here to here. You see, and currently market is retracing. This retracement doesn't mean market is falling. Definitely, whenever market goes up to this standard like this, definitely it has to what? To fall a bit for because a lot of people who bought around this area will be cashing out their profit. So definitely market is going to what? Drop a bit. So that is exactly what has influenced the oil market. Now, when you move on to the currency market, like we have currencies known as the what? The safe haven currencies. What we mean by safe haven currencies is that they are currencies that are expected to retain or increase in value when it seems like the world is at war, or the world is going to an end, or whenever the world is facing some form of crisis. It is always assumed that or expected that safe haven currencies should gain value, or they should retain, or they should increase in value. Example of safe haven currencies are US dollar, we have the Japanese yen, and we have the Swiss francs. Gold is also another safe haven currencies. So what I want to explain to you about safe haven currencies is that whenever the world is in crisis, be it war, like what happened between China and then US. When during the war between China and US, you realize that all invested channel all their investment into safe haven currencies, because it is believed that over there, when you invest in this kind of assets, US dollar, Japanese yen, Swiss francs, and gold, it is believed that your investment is safe. I hope you understand. That is why usually whenever there is crisis globally, anything that is affecting the world globally, whether the financial world or whatsoever, once it is affecting the world globally, you realize that every investor will move on to the safe haven currency to invest his or her capital. That is why you realize that Euro US dollar is dropping, pound JPY is dropping, Euro CHF is dropping, Euro JPY is dropping, and then gold is rallying. So that is the reason why all these assets are moving the way they are moving as at now. So we have what we call RoRo trading. So by the RoRo is the risk off versus risk on trading. Risk on trading. Now let's start with the risk of trading. When we say risk of trading, it is used to describe the risk sentiment where traders and investors reduce their exposure to risk and focus on protecting their capital. Or whenever you hear that traders are in the risk off mode, it generally means that they are reducing their leverage, selling highly risky assets such as maybe the commodities, the stocks, and so on and so forth. Now they will now rechannel all their capital into the safe haven ones, into the risk of currencies such as the United States dollar, the Japanese yen, and then the Swiss francs currency. I hope that is clear. So that is it about the risk off. And I gave you example of risk off currencies, which include the United States dollar, the Japanese yen, the Swiss francs, and then gold. Now, when you go on to the risk on is just the opposite of risk off. So risk off is also a market sentiment where traders are taking on risk. So with the risk on, they are aware of the risk of the market. So they have abandoned all the safe haven currencies because it is believed that those safe haven currencies doesn't really yield so much for them. So they now invest in the highly risky markets, such as the stocks, the commodities, the shares, and some of the currencies that I mentioned, which is the CAD, the New Zealand JPY, the New Zealand dollar, the Australian dollar, and so on and so forth. So those are the risk on currency. So these are the example of risk on assets. Now, let's move on to the charts. Let me just explain to you. If you want to make an analysis on any of the pairs, so let me just switch to Euro JPY here. Let me use Pepe Stone Market. So over here, no analysis. Oh, good. So you see, when the crisis started, this is Euro JPY. Euro is a It's a risk on currency. JPY is a safe haven currency, or a risk of currency. So definitely JPY is going to gain more value, or there will be increase in demand for JPY. So therefore the price of JPY will definitely increase compared to Euro. I hope you understand. That is why you realize immediately after the release of those news, JPY started what dropping. So this is what the beginning of the war. The beginning of the war started, I think, invasion started, I think, 24th February. See that massive movement, market moved massively, came back again to that area of what? Supply, moved again massively, came back, move again massively, came back, move again massively, came back, move. It is now, so currently we are still expecting, once this news or this whole crisis is still there, we will continue to observe what? Euro JPY to be what? Rallying down. That is why you realize for the past weeks, all the analysis I drop on JPY pairs is always on what? Sell. This is because I am focusing on what? The safe haven currency. The same happens to Euro USD. When you check on Euro USD, you realize that it is also what? Moving what? The same pattern. You see, Euro USD is also what? Moving the same pattern. So this is the beginning of the storm, I think 24th. You see, everything happens the same. Market trended down, came back, find an area of supply, trended down, area of supply down, area of supply down. You see, market is still what? Trending down. So definitely, because what? US dollar is a what? A risk on or a safe haven currency. There is an what? Increase in demand for US dollar. So what I want you to learn about this whole concept is that whenever there is crisis, wherever there is war between any of those big countries like US, Russia, China, UK, all those countries, they have control over the world. There is usually crisis in the market. And whenever there are crises in the market, investors usually rechannel all their investment into what? The safe haven currencies. An example of safe haven currencies are what? The US dollar, the Japanese yen, the Swiss francs currency. And then the reason why we added oil is because Russia is the second largest suppliers of oil. So hence the supply of oil will be what? Reduced, which will definitely what? Increase the demand for oil. Once the demand for oil increase, what happens to the price? The price will definitely what? Shoot up. So that is it for the safe haven currency. Now let's move on to the gap trading. So I hope we all understood the safe haven currencies. So the reason why you see all those currency pairs that involve JPY, Swiss francs, USD, gold are moving the way they are moving is because all investment have been what? Channeled onto what? The safe haven currency. And this is not the first time market is treating us that way. It has happened before, and this is more or less like a history. I hope that is clear. Now let's move on to the gap trading. I remember last 2 weeks we traded gap, and then a lot of people were like, they don't know how to trade the gap, even though I drop a signal that let's buy this because of the gap. Most of you were confused about gap trading. So if you really want to know what gap trading is, then you have to be what? Focused from here. Now,